Okay, so let's talk about home equity real quick. I don't personally own a home, but I know that it gets a little bit more dicey when you're in debt and you also have a mortgage, and there's other things that really come into account here. And I wanted to pick your brain for just a minute about how home equity works and how you can use it for some debt help or ways to change up your overall total debt. Let's put it that way.
Okay. Home equity line of credit, that's one of the debt relief options that 9 out of 10 times I will not recommend it, because
Okay.
what's good about the home equity line of credit is the monthly payment is really small and the interest rate is really small. So if you're looking for a really low payment and a low interest rate, you get both of these goals here accomplished with the home equity line of credit. But the danger is if something happens to your monthly income and all of a sudden you have no extra money, you can't even afford to pay this home equity line every month. You can no longer afford it. You could lose your home and all over the credit card debt that you transferred onto the home equity line of credit.
Yep.
So if you have equity in your home, you could go and you could get a home equity line of credit. You get the money out of your home, and now you use that money to pay off your credit card debt.
Okay, so is it like the valuation of the home versus what the current mortgage is? How do you generate that surplus?
Yes. So the bank will usually let you take out up to 75% of the equity that you have in your home.
Okay.
So, yeah, I mean, if you have $100,000 in equity, you could probably borrow up to 75% of that, and then that would be $75,000. You could pay $75,000 of credit card debt paid off in full. Now you've got this $75,000 home equity line of credit. Everything seems good. You're making payments on it. All of a sudden, a year later, you lose your job, and now you can't, even though the payment is going to be much lower, the home equity line of credit, the payment is going to be much lower than
Right.
what it was on the credit card debt.
Okay.
For example, on the credit card debt, $75,000 in credit card debt, your payment is going to be close to $2,200 a month, where on the home equity line of credit, it's probably going to be closer to $1,000 per month.
Okay.
So you could cut your payment in half by using a home equity line of credit. But God forbid, if you can't pay that home equity line of credit off and you lose your income,
Right.
you potentially lose your home because you have a $75,000 home equity line of credit that you just can't pay back.
So would you classify taking out a home equity line of credit as kind of a last resort? Or would this be something that actually makes sense for somebody in a perfect situation?
I think it would make sense to the right person and under the right situation. Like maybe, I'm just throwing ideas around in my head. Maybe if it's like someone that's retired and they're living off a pension,
Yeah.
and so they've got this guaranteed pension coming in for the rest of their life. But so all they want to do is they need more money on a monthly basis. They're paying all this money to this credit card debt. They're paying over $2,000 per month on credit card debt, where if they take a home equity line of credit, out of their house, and they can get the payment down to about $1,000 per month, they just cut their credit card payments in half, and they're saving money over the long term because the interest rate on the credit card debt is probably 15 to 20%,
Right.
maybe more. And on the home equity line of credit, it's going to probably be more like 4 to 5% with the rates in 2020. So they can slash their interest rates in half, slash their payment in half, and they don't have to worry about not being able to pay it back because they get a pension. So they get this guaranteed money for the rest of their life. In a situation like that, it could be a smart move.